and welcome. As Iran and Israel trade strikes and the world is witnessing a fresh escalation in the West Asia conflict, crude oil prices have jumped over 5% already. This is the biggest jump in oil prices since mid May. And we have, of course, a top global oil expert, Peter McQuire, CEO of Trading.com Australia, to decode what this means for the world now. Peter, thank you for your time. Right, but Peter, so if I were to ask you, where do you see crude oil prices in the next 1 week following this escalation? Do you see them pushing higher and beyond that $100 level mark per barrel, or do you see it even higher than $125 per barrel now?
Well, I think over the next week, and that was the first, let's answer that one. They're up 5% today, and it's only Monday and it's Asia trade. We're yet to go through the issue as far as Europeans coming online, and then naturally the US tonight. Let's say if it holds that for tomorrow, we're only $2. You're nearly at 98 now for Brent. You're only at $2 shy of 100. It's not a big bridge to gap over the next 4 days. So I would think that, yes, you'll probably be back over 100 sometime this week. And then where does it roll? If things were to escalate and to be ratcheted up as far as, and that creates war premium, uncertainty, equity markets, fear, US dollar index, all of those components, and of course, don't forget bond yields, then these are very uncertain times, and it's going to be, again, a very dynamic week.
Right, a very dynamic week, and could a prolonged oil shock then derail global economic growth altogether, Peter?
Well, absolutely, Sakshi. I mean, I think that's nearly written in stone. If this was to last for another 50 odd days, it's not going to do the global economy any good. It's going to, and that I'm being a little sarcastic. It's going to really help to start to derail things. You've got inflation. We've got an inflation number coming out of the US this week. We've got every chance you're going to see President Lagarde from the European Central Bank raise rates this week. We've got Kevin Warsh in the hot seat next week for the FOMC meeting, and what happens there as far as rates up. Everyone's saying you've got a 75% probability of a rate increase by December. And there's even about a 17% rate expectation, Sakshi. So that really creates a lot of turbulence and a lot of fear entering the market. And then, as you said, how long does this get protracted for? So I would think that it's here, by the looks of it, it's not going away for July 4. I think it's going to be here, and it's going to be here over the summer period.
By the looks of it, this conflict is not easing now, you're saying. But what does this mean for oil importing economies like India then, Peter? We are already seeing the world. We are seeing, fuel prices hike across the world. We are seeing inflationary concerns across the world. In particular, also now in India, as you have rightly said, so that inflation concerns and fuel prices rising now across the world are a reality. So what does this mean for oil importing economies like India?
Well, like Australia also, and I looked at that this afternoon, Australia took a very, I suppose, gung-ho approach. That's the government. And what they did, Sakshi, they stripped out excise as far as a taxation. They stripped out 26 cents a litre. So that was a saving to the consumers. And I think a lot of nations have got to be very aggressive with this. If crude prices, they've got to ratchet that up. They've got to be very kind to consumers. It's not their fault. It's not the man and woman on the street that are driving a bike or a car in, around Lucknow or Mumbai. It's not their fault. So they've got to come, the government's got to be an assistance. States have got to look at it. Also federal government. And it's a very major concern how it can derail consumption, derail GDP, and increase, naturally, that evil word called inflation, Sakshi.
So your message to all governments and state governments is to come together and not pass on this impact to consumers then, correct?
Well, they've got to look at their tax. They've got to look at their tax structure, and they've got to be very considerate that this is not going to last for the next 10 years. One wouldn't hope. This may last for another 10 weeks. So in turn, in that time, you've got to look at assisting your population. We all understand there's only so many rupees in your purse or wallet, and that needs to be a consideration. People want mobility. They've got to travel to work. I mean, I've been to Mumbai 20 times or more. The consumption and the cost of getting around, you've got to travel, and that costs money to go to work. So the government's got to be proactive and say, we've got to take an aggressive stance here to assist our consumers and our population because it's not their fault.
Everyone really needs to contribute and support consumers at large across the world. Thank you so much for sharing your thoughts and for your insightful interaction.
Thank you, Sakshi.